Hey guys, Steven here. I was clicking around on YouTube, kind of bored, and looking for something to watch when I stumbled across Meet Kevin's video, where he was going over his top 6 growth stocks to buy. Somehow I just missed this when he released it 2 weeks ago. Maybe I was busy that day, I don't know. But anyways, I decided to click on it. As the video played, I kept nodding my head in agreement as I listened to his stock picks, and I'm like, that's a good one, Kevin. I didn't think of that one. But then at the end, when the video stopped, I just kind of sat there with a blank stare on my face. I'm like, Kevin, wait, dude, you forgot about. Hello and welcome to Steven Carlson Show. I'm Steven Carlson. I'm a tech entrepreneur, real estate investor, author, YouTuber, and volunteer paramedic. Now, before I get to the stocks that he missed, let me give you a quick summary of the ones that he did select. Here's Kevin's top picks in under 5 minutes.
Rocket Mortgage, currently priced at about $23.54. Rocket Mortgage just IPO'd. That means they just went out onto the public market, their initial public offering. And this, my folks, is a totally underappreciated stock, in my opinion. I think the fair valuation for this company is at least $30 per share. It IPO'd for $18. It's now about $23.54. Now let's get to stock number 2. Lemonade. Yes, when life gives you lemons, buy insurance. Yes, there is an insurance company called Lemonade, and it has crazy growth potential, but sells at an epic premium. And if you have not yet tried this yet, here's how you can find out why it sells so expensively. Go to lemonade.com and get a quote for insurance. Pick a state that works. They only give or provide insurance in about 27 states. This is an insurance company that works without brokers. So there's nobody for you to talk to other than a chatbot. I'm sure if you really need somebody, there's somebody to talk to, but they deal with claims and pricing your insurance policy through algorithms and chatbots. And by collecting all of this extra data on you, they're able to evaluate how risky you are, and a lot of that information ordinarily gets lost through traditional broker services. Well, it is a mattress and pillow company that makes buying mattresses and pillows ridiculously easy. I don't know that there's much to that, but they do have some pretty crazy marketing. You've probably seen their viral ads with their egg squishing and like the glass falling on the mattresses. And you just look up purple pillow advertising. It's great. Anyway, the easiest thing that I recommend for you to do with this company is just order one of their pillows and see if you like it. I like them, although I've only experimented with one of their pillows, and I'm waiting for a second one that I think might be a better fit for me so I can really decide if I want to go full steam ahead on this company. Right now, I've got about $40,000 riding on this company. This company just went profitable, and it grew 68% in the first quarter of this year compared to last year. If they keep up this pace and grow at just 50% this year and next, they could hit $1 billion in revenues by the end of 2021? Or Peloton. Peloton is currently trading for about $67.91. Peloton is a company that I'm personally very excited about, but I am worried that it could be a fad, and that would be very bad. Hey, that rhymes. I personally have a Peloton bike, but I do find that I spend more time on my walking treadmill than I do my Peloton bike because I can work on my computer. The quality of the bike is amazing, but the company is currently losing money. Interestingly, though, their next earnings cycle will end, their next earnings release will be on September 10th. Now, to me, this is going to be a very interesting release, and here's why. Usually, about 50% of the company's revenues go to making the bike. Then another 50% go to commissions for salespeople in malls to sell the bike. However, a lot of these commissions aren't happening right now because a lot of the bikes are being sold online because the company basically went viral during the pandemic and nobody's going to malls. So rather than selling these bikes through expensive channels like using commissioned salespeople in malls, they could sell them online thanks to viral pandemic advertising. 5. Dave & Buster's. Now listen to this, okay? Before you skip this section, listen to this. Many of you know that I'm gung-ho about Dave & Buster's. I made a full detailed breakdown of their company in June, and I got spanked by the second wave or the continuation of the first wave. I don't care what it is, I got spanked. I bought the company at $16 to $19 per share. It's now at about $13.59 per share. Not great. Here's the quick and dirty on what I think about Dave & Buster's right now. Chuck E. Cheese went bankrupt. If Chuck E. Cheese is forced to close its stores, guess who's going to fill the void? Dave & Buster's. Now, Chuck E. Cheese might come back, but if it takes multiple years for Chuck E. Cheese to come back, Dave & Buster's is going to saturate the market and Chuck E. Cheese is going to get squeezed out. Dave & Buster's also has smaller store models that are easier to open, quicker to open, and are much more profitable than the bigger stores. This pandemic could be a beautiful opportunity for Dave & Buster's as long as they don't go busters. Let's now talk about Redfin. Redfin. I first advocated buying Redfin back in March when I bought this stock for about $10 per share. It has since over 4.5x'd in value. I love this company, but I also love to hate them because I'm a real estate agent and they want to put me out of business. I think they are going to be a massive millennial disruptor in real estate, and one of the big reasons I'm investing in them is because the bigger they get, the harder it'll be for the average real estate agent, and they're growing fast.
Okay, with that out of the way, what stocks do I think that he missed? Well, before I get to that, real quick, I want to remind you about the Webull stock trading platform. They're giving away 2 free stocks, with one of those stocks being valued up to $1,400 when you open an account with $100. Now, please make sure that you use the link down in the description. It really helps support this channel, and I appreciate it. Thanks. Now let's get over to Kevin's stock that he missed out. The top stock that I am truly in love with is Apple. But not for the reason that you think. Yes, of course I know a stock split was announced a few weeks ago, but that really has very little to do with the reason why I'm choosing them today. Now let me back up just a teeny bit for anyone that's not exactly sure what a stock split is. Let me give you the quick 30-second summary. Now currently Apple stock is trading for about $460 a share. Now, after the stock split takes place on August 29th, for every 1 share you currently own, you will instead own 4 shares, but they're going to be equaling the same value. Okay, I probably confused you, so let me try it another way. When you own 10 shares of Apple, that's worth $4,600. You're still with me, right? Okay, after the stock split, instead of owning 10 shares, you now own 40. But, and here's the key, they're still worth the same amount of money total. Nothing really changed in the overall value of Apple, it's just that each share is now priced at 25% of their previous price. Now, there are many reasons why a company would want to offer a stock split, but for this discussion, let's just keep it simple and say that Apple wants to make their purchase price of their stocks a little bit lower to make it easier for new investors to buy in. Now that we've covered that, let's get back to my reasoning behind Apple stock and how I think the stock will easily quadruple in value in the next few years. Remember, I said it's not because of the stock split that I like Apple. Now, of course, the stock split will probably still temporarily increase the value of the purchase price of the stock, but that's just kind of all the hype around the stock split. No, the reason why I really like Apple is part of what they announced back in June at their Worldwide Developer Conference. Now, without getting too geeky here with you, Apple is switching from the Intel processors to their own in-house developed processors. And putting all the technical benefits aside, remember, this is a finance channel, not a tech channel, switching to in-house processors will save Apple hundreds of dollars per MacBook and iMac sold, and thousands of dollars on each Mac Pro sold. These savings could easily be partially passed on to the consumer, which honestly I kind of doubt. Remember, Apple is not exactly known for low-cost PCs. Instead, I think most of this is going to go to their increased profit margin per unit sold, and will be huge and push the stock price even higher. Apple is also rumored to be revamping its online services to kind of offer something that's slightly more appealing to a larger customer base, which hopefully will get more people to sign up for their online services, and that will increase their profit share as well. Now, lastly, Apple has been rumored for a while to be in the works of producing their own all-electric car, and also expanding more into the wearable space with dynamically focusing prescription eyeglasses that will remove the need for bifocals for many people. Now, I'm hitting all these tech items very quickly, so don't worry if they kind of blew over your head. Now, if you do want to talk geek with me, remember I am a tech entrepreneur, jump over to the Discord server I set up and we can chat geek over there. Now, with all the tech improvements in mind, in my opinion, I think that Apple stock could easily be back up to $300 to $400 range after the stock split within the next 2 years. Currently, I have a little over 102 shares in Apple across multiple brokerage accounts, and I believe in Apple so much that I'm going to be putting my money where my mouth is and purchase an additional 25 shares right here, right now with you. Also, yes, I know it is very ironic to be touting how much I love Apple products with a Windows PC behind me. But honestly, it's just used as a backdrop and occasionally for PC gaming. My actual day-to-day use is on a Mac Pro at work, a MacBook Pro, and a Mac Pro at home, and of course my iPhone, Apple Watch, and multiple iPads in my life. Now, putting Apple aside for a minute, I also love Amazon and Tesla stock. But those really are topics for another video. Now, what do you guys think? Should Kevin have included Apple in his top picks? Why don't you comment down below and let me know. Now, if you plan on refinancing your current property, maybe to pull out some cash and invest in some of these stocks, which you never should borrow money to invest. But anyways, make sure you check out my other video that covers the new COVID tax penalty on refinances. The link is in the description and in the card above. Now, before I let you go, it is essential to keep in mind that nobody has a crystal ball. These stocks could go up, they could go down, so make sure you do your own research and basically don't sue me if the stocks fall. Thank you very much for watching. If you found this information useful, please consider sharing this video with your friends. Well, unless you kind of hate your friends and you don't want them to make good, sound investment choices, then I guess at least why don't you subscribe and click on the notification bell yourself. That way you have all the great, amazing stock tips without your buddies knowing where you're getting it from. Anyways, thank you very much, and I'll see you on the next one.